If you're relying on home equity and appreciation or even rental demand over the next decade, you need to hear this. Demographics, not rates, not the Fed, not inventory, are about to decide who wins and who gets trapped in the housing market that is to come. Millions of owners are aging out, millions of fewer buyers are aging in, and the housing market you think you're investing on isn't the one that you think is really coming. Let's dig into this data because it will change the way that you think about real estate and who the next buyer will be in the next 20 to 30 years as a real estate investor or a homeowner. The first thing we want to focus on is that domestic migration in 2025 is frankly horrendous. Look at this population change through domestic migration. South Carolina, Idaho, and North Carolina saw the most growth in 2025 from net migration. New York, Hawaii, and Alaska and California saw the biggest net outflows from these different movers. Now look at this. Look at Florida down there with only 0.1%. Well, Florida has some very specific issues where if we don't have net migration in through domestic migration or even international immigration, then we have such an aging population there that this could be drastic for the housing situation. Look at this. Also, Texas has really slowed down. You can see that New York isn't doing very well. And I know a lot of people say, hey, the Northeast is immune. Well, they have a lot of aging inventory and aging population, and young people, as according to this chart, through domestic migration, are moving out of the state. They can't afford the pricing and they go to lower cost southern states where there's even more job opportunity versus the cost of living. And we see this in California as well. You can see this in Colorado. Obviously, these areas that are experiencing this migration now, it's not looking good. You need the migration. You need to think about, as an investor and as an owner of real estate, who is going to be the next buyer of this property at this price at today's interest rates. And I know the story has been around interest rates over the last few years, but this is ultimately one of the biggest conversations is going to be demographics and migration. Now look at this. This is specific to Florida and Texas. This is domestic migration to Florida and Texas. It's slowing dramatically. Net migration from other states to Florida and Texas continued to decline in 2025, hitting the lowest level since 2010 in both states. You can see here in 2022 it peaked. 2020, it obviously jumped very rapidly, and now it's coming right back down to a very, very slow migration levels. This comes from Realtor.com. The pandemic pulled forward migration to these popular states, compressing multiple years of expected migration into a shorter window. Basically, we had 5 years of migration happen 2 years. That's why it appeared that we had a housing supply issue. We didn't have a supply issue. We actually just had an influx of demand come in all at one time, and the supply kept the builders just went crazy with building out the supply, and now the demand has dropped, and now we have an oversupply of inventory in both of these states. Look at this. This is the net migration for Florida specifically. You can see that it's just dropped about 93% over the last few years after 2010, 2008. It started climbing because Florida was an affordable market to move to and it had some decent jobs. After pricing kind of got a little bit crazy, obviously, and the Fed raised interest rates, we saw this massive decline in the amount of people moving here. It's just no longer an affordable time to move here. And I moved here in 2014. Part of the reason I moved to Florida is because we had the no state income tax. It was an affordable place to live. The wages were decent. And at a certain point in time, the prices just went too crazy where the math stopped making sense. And here's a point where I really want to hammer this across with the followers who are watching. The math actually matters, okay? It's not just sentiment. It needs to mathematically make sense to most people to buy a house versus renting or some other strategy. And this is obviously a reflection of the math breaking, is that net domestic migration is slowing, wages are slowing, and job growth are slowing. Now, here's another factor I want to bring up is immigration, okay? Not just domestic migration moving from one area of the country to another, but immigration internationally is slowing as well. Immigration crackdown slows the U.S. population growth. This comes from the Wall Street Journal. You can see we had this massive amount of immigration. I know there's a lot of politics on here, and we had basically wide open borders with a lot of people coming in, and we have had a lot of international migration. Well, now that the policies have changed, this immigration has not come into our market, and it's going to impact it quite dramatically. Now, let's look at which states are going to be impacted the most. This is international migration compared to a year earlier. You can see that California had the largest drop of net international migration, then New York, then Texas and Florida. So it's no surprise there that we're seeing Texas and Florida. This is obviously impacting their housing markets as they're leaders in this market decline. So not only do we have domestic migration, less people moving in from around the country to Texas and Florida, but we also have people outside of the country, less of them joining and actually leaving, right? So this is net international migration. You actually see people leaving Texas and Florida as well, which is a huge red flag, as those are very valuable buyers that would otherwise be in the marketplace. And here's the other factor. So the migration and the immigration are looking very poor. And now household formation on top of that. So people in the United States who are making households are actually down to a 9-year low. So you can start to see these demographic, immigration, and domestic migration stories start to play out. How is this going to impact the housing market? I would love for you to drop below. Is this a structural decline where we're going to start seeing this rapidly across the board over the next decade or two, where we're just going to have a ton of inventory coming on? Household formation is going to continue to go low. Immigration's not going to happen here. And then people are going to continue to migrate to areas that are affordable, especially the next generation, leaving these other areas that are priced too high. They're just going to start to stagnate and come down. I'd love to hear what you think on that. Now, here's, of course, my market. This is Jacksonville, Florida. We had 2,000 listings just a few years ago in 2022, and now we're up to 12,000 active listings, and the builders keep on building because it takes years for them to finish their project. It can take 2 to 3 to 4 years for them to build a multifamily apartment complex, or to usually under 2 years to build a house. And we see these entire communities that are basically vacant, and we're seeing a lot of new construction multifamily that are basically vacant that aren't even included in this chart right here. Of course, we saw a little bit of a dip in number of new of active listings at the end of the year because so many listings expired. About 22% of listings expired on December 31st. And this is pent up supply that's going to come back on market, and we'll see what they do with the price. It's likely that the sellers are just going to continue to push prices down and just capitulate to the buyers that are sitting on the sidelines. It's not that the buyers don't want to buy, it's that we have an affordability crisis. Now, let's look at what this is. This comes from Harvard JCHS tabulations of U.S. Census Bureau censuses. And this is really interesting because we're going to see more structural decline across the board. The pace of household growth is projected to actually slow in the future. The pace of growth is expected to slow between 2035 and 2045 to a gain of just 5.1 million households, which be less growth than in any decade of the last 100 years. Okay, so household formation is slowing. This obviously will impact the entire market. Obviously, where are we going to get these people who are going to live in all of these houses? And we already have about 15 million vacant houses across the country already. And now that we see that this pace of growth is slowing as well, it's a huge issue. They have 3 different lines here. One is for high immigration, low immigration, and the main series, which is basically their median. You can see what their projections are on households, and it just continues to decline the last couple decades based on the historical census data. And they're moving forward saying, hey, what's it going to look like in the next from 2025 to 2035? They're saying, oh, it could actually be lower than the 10.1. It could be 6.9, 8.6, which is their main series, and then 11.2. I mean, they're basically saying the change in household and projected households are going to be a lot less than they were. And look at this for 2035 to 2045 as well, right? You're talking about another further drop, basically half of what they had from 2010 to 2020 and 2035 to 2045. This is a very terrifying situation when you're looking at it from a real estate investor. Okay, well, if we don't have household growth, we're going to need tons of high immigration to be able to fill these houses up that we have built already. And this is another one that comes out with less household growth. Demand for new housing units is projected to decline. And you can see the projected demand is much less than the prior years as well, going into 11.3 all the way down for the next decade, 8.0. In some, the projections detail a future in which the number of household Households grow far more slowly than previously experienced. The slowdown will be driven mainly by an increased number of older adult households. That's what we're talking about, the boomers plus 62 years old or higher that are lost or consolidated each year. Households will still form, many of them by a more diverse set of younger adults, but not enough to outweigh the rising number of households lost. This comes from this Harvard study. So look, we're in an affordability crisis. We have a bunch of domestic issues in terms of migration. We have immigration. And now, of course, we have this demographic situation that's layered on top of it, where you kind of look in long term, where do I want to keep my assets over the next 2 to 3 decades? Who are going to be the next wave of buyers? Well, your next buyer might not exist because they never have been born, because people are putting off having kids. And when you look at the birth rates, it's quite terrifying. In addition, when you look at Florida, the costs have increased drastically. You see taxes increase, insurance, repairs. Everything has skyrocketed basically more than 50% over the last few years. And now we're talking, this is a report that came out. Florida homeowners pay the most in HOA fees. The HOA fees are trying to keep up with the repairs in their accounts as well. You can see that they rose $135 a month, up 8% year over year. So these high cost areas are just continuing to get more expensive, not just on price, because prices are starting to come down, but because of all these other factors, insurance, taxes, repairs, etc. And of course, the market's already feeling it. We're at a record low consumer confidence over the last 13, 12 years. Pending home sales are one of the worst years ever. This is a record low in 2025 for the number of homes that are actually going into contract. And the inventory continues to stack up here in the Sun Belt. And this is a red flag for what's to come. So we're already experiencing distress before all of this is really showing up in the market. And you can see that there's a little bit of divergence in what is going on in the market between the North and the South and the Sun Belt. You can see the North is still holding up and experiencing price gains. However, with the demographic shifts and the older inventory, the insurance issues that they have there, it's going to be a really interesting market to watch there in the Northeast. There's some areas where you're already experiencing some pain. Philly is starting to really slow down. It's starting to spread, right? Real estate is uneven when you have these type of issues. There's pockets of pain, and then there's areas that are less impacted. I do think that the Northeast will start to feel a little bit of a slowdown in the coming year or two based on the information that we're receiving here. But Florida is going to be a ground zero. Texas is going to be ground zero. California is going to have some issues because of the issues that we were just discussing. This is jumping into the inventory story. You can see that the Florida housing supply is actually greater than a lot of the Northeast supply combined. And this is because we're seeing a ton of new construction. We're up to over 12 months supply of new construction homes just sitting there waiting to be sold. You're seeing these developers out there just slash prices to get it sold or sell entire communities to institutional buyers and things like that. This comes all the way from March 2025, but I can tell you this market has continued to move up. I haven't found one that's more recent, but I like the idea of it because it just shows you the tale of the two markets in just one slide, which I think is really important to realize that every market is micro. But these themes that I'm discussing, the broad themes, will eventually apply to the entire market as it plays out. For Florida specifically, this is a great chart that just came out from Resi Club, Metro Area Home Price Shift since March 2022. You can see that, look, Punta Gorda was one of the top ones, and now it's come down the most. Tallahassee grew, and it's come down, right? All of them have basically come down from their peak. You can see that it rose 70% within 2 years. That's just because of what happened with interest rates and speculation, and we had this massive run up, and now we're all the way back down to 2021 numbers. And that's where I think we're probably going to end up is between probably the 10 to 15% range, right? We're just having a mean reversion, and Florida is going to be one of the first states to do that. We had this massive run up due to speculation, due to the zero interest rate policies of the Federal Reserve. And then once the Fed pushed pause on March 2022, we saw basically the market completely change direction. So interest rates definitely play a major role in speculators because it's their cost to finance their purchases. It's also going to be the cost for retail buyers to purchase as well, because we run on a payment economy. So anytime you see the rates go up, asset prices come down, right? And that's why the government has been just rallying around, hey, we need to get interest rates lower. We need to get interest rates lower. The problem is that the consumer, the next buyer, is either not being born that's going to be able to purchase it in 30 years, or the current buyers are being priced out, or they're getting money from mom and dad to be able to put a down payment on their house. And none of these things are necessarily really good. We'd love the next generation to be able to stand on their own. No problem getting help from mom and dad. But in Florida specifically, we're still at elevated prices, as you can see here. Some have corrected a little bit, some have corrected a lot, but I expect them to continue to correct over the next 2 to 3 years. Real estate's an illiquid asset. It takes time for the market to correct and go in the, mean revert into a direction that was long-term sustainable, because this type of growth, you look at this chart, it is obviously not a sustainable chart. I'd love to hear what you think. What could the next decade look like in housing based on what we're seeing, this domestic migration, the international immigration, the silver tsunami with the baby boomers passing away, sadly? How is this going to impact your business plan and what you're going to see in your area over the next few years and what you're going to do with real estate? And will we see these structural declines in housing over the next decade? Will they actually play out the way that we think it will? Or is there something that's completely missing from what we're describing here? I'd love to hear from you. As always, you can comment below. If you're looking for a real estate agent in your area who understands the market, reach out to me. I'm happy to get in touch with a top real estate agent. I can include my email address below, and you can always check the notes. And if you're looking for more up-to-date information, you can follow me on X at John Brooks, or you can join my Substack where I talk about things I can't talk about here on YouTube. Thanks so much for following, and I'll see you next week.